Hello traders and welcome to another video review. Today is Thursday, 21st of the January 2021. Let's take a look at the Forex calendar. It looks like we are going to have a busy day today. So let's just swipe down, and what do we have today? First thing is unemployment rate and unemployment change data from Australia had been released. They have a high impact on the financial markets. As you can see, unemployment change was in line with the expectations. Unemployment rate worse than expected for 6.6%. Consumer inflation expectation, it's not rising as fast as it should be. 3.5% versus 3.5%. So, slightly worse than expected overall data from Australia. So we will take a look at the Australian dollar for sure. It's done. Now, the Bank of Japan interest rate announcement done, minus 0.10%, in line with the expectations. No change in the monetary policy here, and it will be interesting to take a look at the monetary policy meeting minutes and the Bank of Japan outlook report as well. Press conference done at 7:30 already. That's two key important. One was of course during the night, and one was during the early well, it was night as well, night and early morning. So quarter to two, during the London session, ECB interest rate announcement again 0% versus the forecast of 0%, and the European Central Bank is expected to leave the key interest rate at the level of 0%. Deposit facility rate, the same situation. Marginal lending facility, the same situation. It's very important to keep an eye on the monetary policy report for any clues of going to the negative territory with the interest rate. Very interesting thing to keep your eyes for. And ECB press conference 2:30. Very important to take a look at this press conference as well. So another key event ahead of us around 2 o'clock, 2:30. 2:30 is again time scheduled for the release of the ADP non-farm employment change and new house pricing index from the Canada. So for all of you CAD traders, important news. And we are starting the New York session, right? Building permits, housing starts, Philadelphia Fed manufacturing index, unemployment claims and continuing claims. Bunch of data from the American economy scheduled for release 2:30. So it doesn't look very impressive. It's generally not that much. It's not changing that much. There is no outstanding numbers here, even for the unemployment claims. So we will see how the market will react for the steady that data, unless there is some kind of unexpected surprising data bunch from the, for example, labor market. 4 o'clock consumer confidence from the Eurozone, and then we are entering a late, really late New York session, early Tokyo session. This is a bunch of data from the New Zealand business manufacturing index, consumer price index, which is, as you can see, for the fourth quarter, of course, is going to be, I mean, we will see what it's going to be, but the forecast is 0.2%. So again, the recent reading was 0.7, now it's 0.2. No inflationary pressure on the from the consumer price index so far, so no pressure for the Reserve Bank of the New Zealand to change the current monetary policy. It's like hiking interest rates, right? And then of course we got some PMI manufacturing data at 11 o'clock p.m. So kind of a busy day as for the first day, kind of the day that all of the traders like and want to be almost every day, because the price might be rather violate, and the volatility might be increased today. But let's take a look. What can we analyze? For sure, Australian dollar, US dollar to the Japanese yen. ECB interest rate announcement, that would be euro dollar, of course, and then we will take a look at the New Zealand dollar. So everything that is connected with today's economic risks, right? Okay, so let's start with the Australian dollar because it's already past us. And as you can see, 5 waves up had been made and the market is now locked. The market is clearly now locked between these two levels, between 7,822 pips and 7,679 pips. So right now there is almost no change in the market behavior. It's been trading horizontally since 7th of the January. When we go down, we bounce. When we trying to break to the new highs, we go down. As you can see, 5 waves might be completed here. So this is a kind of a part of a correction, of a corrective cycle, and kind of a correction that can be, for example, a simple ABC correction. But we don't know that yet. It looks like the A and B and C waves are done, which is okay. But this corrective cycle is too short in time and in price to be considered as a full corrective cycle that was terminated. That was yesterday. No, 18th of the January. So right now, 3 days of up move, but the target of 7,806, the technical resistance has not been hit. Before this level will be hit, there is another interesting level, 7,777 for lucky sevens. In that level, that's another technical resistance, and of course swing high located at that high should be here and located at 7,822. Only if this level is violated, then the market can continue some sort of the extension of the fifth wave. And on the other hand, if we break and close above 7,679, we have a chance to go lower in a corrective cycle towards 7,643, and then we should go somewhere around 7,574 before we will hit 7,483 pips. So Australian dollar looking toppy, and as you can see, the momentum is still strong, but it's the momentum is positive, but it's not that strong as it used to be. So please pay attention to the Australian dollar and the current situation. So New Zealand dollar, ahead of the data, we are bouncing ahead of the data. Let's take a look from the wider perspective on the New Zealand dollar. Again, there is some sort of the trend line. We can adjust our chart and add some trend line here. Let me just get rid of the extensions. There you go. This is the breakout, right? Very nice. We got a breakout above this short-term trend line. We have A, B, C correction towards the level of 7,093. So that's fine. We are going higher. We broke above 7,175. If this candle will close green and will close above this trend line, then of course the next target is 7,236. The long-term trend looks up. It's still being intact, and it looks like it's being continued in the nearest future. Again, this is a bounce from 48, 49 points, so it's almost a neutral level. We have a bounce increase in a momentum. Momentum is now positive, but it's not that much strong. So the traders should now take a look and keep an eye basically on the level of 7,236, because only if this level is violated, then we can travel towards swing high 7,313. This ABC correction might be completed, but it might be only the first subwave of the corrective cycle. For now, breakout of the trend line is important, and 7,236 technical resistance is important to watch. Euro dollar, of course. Euro dollar, as you can see, our scenario that I had made it's now 7th, so it's like 2 weeks ago, had been successful. As you can see, we got the breakout from this rising wedge. The expectations were that we will hit 1.2013, but we hit only the level of 1.2087. So this might not be completed yet. This down move might not be completed yet. Right now we hit the beginning of this rising wedge. That was of course like kind of a technical support, 1.2060. We got some slight bounce, but we didn't close above 1.2124, which is another technical resistance for the price. Of course, the game changer for this downward scenario would be sustained breakout above 1.22. 100, because that would mean the bulls are trying to get towards 1.2273 and then maybe even towards the recent swing high. But it looks like the momentum is still negative. 47 was the highest reading, so we are still in the negative territory, approaching the neutral level. So there might be some kind of a consolidation, some kind of a attempt to go higher, but the overall sentiment is now negative. The momentum is negative. It's not that strong, but it's still kind of a negative. And if the 1.2060 is violated, then 1.2013 is still the open target for the euro dollar. And there was one more market, US dollar to the Japanese yen, of course. This is daily time frame chart as well, and as you can see, we are still fighting for the long-term trend line. First attempt failure, then second attempt failure, another attempt 2 days ago failure, and then we can even say that this is bearish engulfing, but it's in the wrong position of the wrong place on the chart. This is more likely like a bearish engulfing pattern. And then of course we got the rejection, and we are making a new local low. The local low was made at 103.35. the next target is 103.20, and then 102.88. The recent technical support, the last technical support, which is important, I will just place it here, and that's of course the level of 102.61. So this is that level, that's the swing low made in the oversold conditions on the bearish divergence. We got some bounce, we got the attempt to rally higher, but everything that is going on here last 7 days, it's telling us that this is a failure. This is a failure, and there is still a potential for this market to go lower. Take a look at this trend line. It's a long-term trend line, and violation of this trend line would likely mean this downtrend. This is like 2 years. No, sorry, it's 1 year, the end of the March. This almost one year, 10 months for sure. Anyway, almost 1 year downtrend would be terminated, right? So any violation of this trend line would be the first trigger, the first indication of potential trend line termination and some sort of a correction, maybe higher bounce or something like this, maybe even trend reversal, right? But first we need to break above the trend line. We need to break above the recent high, which was now 104.41 and then 104.75. Without this, there is no chance for the US dollar to go higher on this market. So I think that's everything for today. We got the 4 markets cover. Pretty much busy day. Please remember, plenty of the key economic data will be released today, so I hope that you guys will trade accordingly. And see you tomorrow on Friday, last trading day for this week, and the last trading Friday for the January. So I hope I see you tomorrow. Take care and bye bye.